Today is Thursday, the 30th of November, the last day of the month, and this is a recap for the stock market activities today. Now, folks, I got a good one for you tonight. Interesting action in the stock market today. We talked about the signs that we're stalling, we're running out of gas, and then today we got yet another signal that, okay, we're beginning to break here. But of course, it is the last day of the month, and the managers want to chase performance. They want to close positive by the end of the month. So we saw a little pump at the end there. We got a big buy order that came out at the end of the day and bought pretty much everything. And folks, an important lesson from today's action is you gotta wait for confirmation. I've been talking about this on the stream. I've been talking about this on Discord. I gave you the numbers. We don't have confirmation for a reversal until we see certain levels of support being broken. And most importantly, we have to close below these levels. A lot of you say, hey, I don't want to miss out. I want to take the trade before it happens, but you gotta wait for confirmation. If there is a reversal, we got plenty of meat in the bone to chew on here, folks. And I'm not saying we're not going to drop down tomorrow. All I'm saying is waiting for a confirmation is the disciplined way for trading. Enough said. Let's recap the events that we got today. We begin with the PCE inflation rate. Here's the headline for you. The Fed's favorite gauge shows inflation rose 0.2% in October and 3.5% from a year ago. Keyword rose. Now, did not break expectations, so we did not see a violent reaction one way or the other. But the point being here is, the market now expects that the inflation problem is gone, it's over. We're going to have rate cuts ASAP, forgetting the fact that we're seeing inflation still going higher. 3.5 is more than 50% above the inflation target by the Fed. And if you look back in history, the Fed doesn't begin to cut rates until we see problems in the economy. You go back to the 07 case. We talked about that last night, but understand that it was the summer of 2006 when the Fed paused interest rate hikes. And the inflation problem back then was not as big as we have today. But the rate cuts came in September of 2007, over a year after the pause, even though back then we began to see job losses and the mortgage bubble blowing up as early as 2006. So when we look at GFC versus today, back then inflation problem was not as big when the Fed paused. Likewise, back then we have seen economic weakness more than we've seen today, yet the Fed did not cut until September of 2007. So the market right now is in delusion, thinking that the Fed is going to cut. You gotta go back to past examples. They're not gonna cut until something really, really wrong happens in the economy. And of course, after the PCE report is out, here comes President Joey B. And he wants to brag, but he can't, because you can say that inflation is going down all you want. The consumer in real life is still suffering from higher prices, and that is reflected in the poll numbers. So Joey B comes out and says, let me be clear to any corporation that hasn't brought their prices back down, even as inflation has come down. It is time to stop the price gouging. Give the American consumers a break, Jack.
Come on, man.
As if he has a magic wand, you know? Get those prices down now. This is the problem with this administration, folks. And they got a community note, by the way. It's embarrassing. The problem is they keep gaslighting. Stop running away from the problem. Address the problem. We feed you. We hear you. The numbers coming out of the news, oh, inflation is coming down, but you're not feeling it. I got you. I feel you. I know what you're going through. A little bit of humanity goes a long way. But this gaslighting approach that, oh, Bidenomics, we're doing pretty good, and you guys are just complaining too much, that's going to backfire in a big way. And if I was the orange man, I would do nothing at all. Just watch Joe Biden blow himself up here. And who's the replacement, by the way? Because that's the talk right now. Who's going to be the replacement for Joe Biden? Because what he's saying right now is bullshit. The fact that the inflation rate is going down doesn't mean that prices are going down. It means that the rate of increase in prices is slowing down. And if you look at corporate earnings from any consumer company, their margins are not really that good. Some of them are horrendous, meaning that they probably should do some price gouging here, but they can't because the consumer is getting weaker, and they can't reduce prices because their costs are still too high. The companies that are doing price gouging are the healthcare insurance companies, the car insurance companies, home insurance companies, the banks that are not giving folks a proper rate in savings, the cable and internet services companies. They can charge whatever they want, but of course they're not going to address any of these because they happen to be the biggest political donors. But we go back to the question now. And here's my tinfoil hat theory. Joe Biden's toast. Who's going to be the replacement right now? Because you look at the polls, orange man, jail or no jail, he's winning, and he's going to win. So panic at the White House, panic at the DNC. Who's going to be the replacement? Kim Jong-un Newsom? He couldn't even fix California until Xi Jinping showed up. Maybe Xi Jinping should be president here. Here's my tinfoil hat theory. I think the Democratic Party is now prepping Jamie Dimon to be the next president of the United States. You heard the tone that he talked with in the commentary last night. He's speaking like me. He says that the inflation problem is not gone. He's worried about the economy. And now he comes out and says that America has failed its bottom 30%. What the hell have we done as a nation? Stop sneering at the Trump MAGA supporters. I don't know about you, but this sounds to me as somebody who's running for president here. Dimon wants to connect with the middle class, with the poor. I hear you, I feel you. Of course, it's a long shot. This is the top banker of the country, stole, robbed, destroyed. I don't think he's going to get away with it. And I think Trump is going to smoke him in the debate stage if he is the nominee. But anyhow, back to the PCE report. Here's the catch in that report. Consumer spending is actually down. And again, we keep getting more and more evidence, folks, that we're heading into a recession here. The consumer is the heart of the economy. And without the consumer, we have no economy. We have no stock market. Everything goes down. The stock market right now is surviving based on companies, the big caps, the Magnificent Seven, who do B2B businesses, whose spending is mostly based on other corporations buying shit from them, such as Nvidia and Microsoft, because corporations have a ton of cash. But at the end of the day, their end product, they're spending because they have to target the consumer. At some point, the feedback will show up. Hey, wait a minute, the consumer is weaker. We got to stop spending here. Of course, within the Mag 7, we have other consumer companies that are lumped in. Those at the highest risk. We're talking about Apple, we're talking about Amazon, and of course, the souffle, which we're going to talk about in a minute here. But before we do that, after we got the PCE, we got the commentary from New York zombie Fed President John Williams. And listen to what he said. He expects inflation to continue to drift lower, finally hitting the Fed's 2% target in 2025. However, he said policymakers will need to stay vigilant to keep rates at a, quote, restrictive, end quote, level. Adding, my assessment is that we are at or near the peak level of the target range of the federal funds rate. I expect it will be appropriate to maintain, not cut, maintain a restrictive stance for quite some time. That's a typo. It says some me, but it's some time. To fully restore balance and to bring inflation back to our 2% longer run goal on sustained basis. Doesn't sound to me like somebody who wants to cut right away. And you heard the commentary by Thomas Barkin last night. And tomorrow we have Powell. And at the end of the day, cutting rates prematurely could be a major mistake right now. There's absolutely no possible way the Fed will cut rates so long as inflation is rising. Did you look at the PCE report? Inflation rose. Once we get headlines that inflation contracted, negative month on month, negative year on year, then we can talk about cuts. But again, as you heard here from President Williams, the 2% target will not be reached until 2025. So what's going to push us into rate cuts will be an economic disaster, be it the garden variety recession of the unemployment rate increasing, or the systemic risk scenario, or something blows up. And the trick with the systemic risk scenario is sometimes you don't know where it's going to come from. 2007, 2008, we got it. We saw the weakness in Bear Stearns. We've been talking about Lehman, but honestly, nobody thought they're going to blow up. We thought they're going to be in trouble, but nobody thought Lehman is going to blow up. Until the very end, until September 2008. Except, of course, the perma bears like us who've been talking about it a year before. Watch out, Lehman, there's a problem here. Watch out, Bear Stearns, we got a problem here. Watch out, Citibank, we got a problem here. Watch out, AIG, we got a problem here. But everybody said that, yeah, it doesn't matter. This is America. Okay, we'll see. The other story is what we got from OPEC Plus today. So there was anticipation that we could see a large cut that forces a short squeeze. Well, we got a cut. But the market looks at it and says it's not big enough to cause a short squeeze. And instead we got sell the news. Oil prices went down. With that being said, we got a major development here. Brazil now joining OPEC Plus. Why is this significant? The problem with OPEC Plus is even if they can cut all they want. The problem has been Russia for years. Now we have the OPEC Plus alliance. So Russia is pretty much a member of OPEC. Now we have another problem. USA and Brazil. USA is not going to join OPEC. That's out of the question. But Brazil has been ramping up production by a lot, which kind of undo all of the cuts by OPEC Plus. So now Brazil joining OPEC Plus is a significant milestone. It means that OPEC Plus have more control over the oil market than before. And now it becomes a battle between OPEC Plus versus United States, not versus United States and Brazil. And that's really important. Now, is it going to pop oil prices higher again? I doubt it, because oil prices have major headwind, and that is the upcoming recession. The only tailwind is a catalyst that could force a short squeeze. Have we seen that before? The answer is yes. Go back to 2008. Back then, a lot of folks said, George Bush is not pumping more oil, and that's why oil prices are going higher, and I'm paying $100 at the pump. Saudi's not pumping. But in reality, the massive surge in oil prices back in 2008 happened because of a short squeeze. You see, the shorts got into the oil market back in 2007. The moment they hear the whistles of a recession, they begin shorting. But understand that when the Fed cut rates back in 2007, they loosened financial conditions, and that induced a short squeeze, and it caused a massive surge that summer. Can we see the same phenomenon? Yes, if the Fed cuts rates prematurely. But right now, that tailwind is not strong enough. The supply cuts that we got today, not strong enough. So the headwinds now win and become the predominant factor in the pricing of oil. Here's the other risk though. Suppose we go down below 80 to the 78, 75 on Brent. I think that's going to do major damage to the economy of Saudi Arabia, and they have to do something radical. And I said before that they missed the opportunity in doing an embargo. They had the political cover to do an embargo and push oil prices beyond $150 a barrel. They did not take that opportunity. Could they be forced to take it if prices go down further and the war in the Middle East doesn't improve? That is a possibility, but right now it's not going to help oil prices from going down. And the last story that we got tonight is the revelation and the deliveries of the Cybertrash by Tesla. You know, the truck that you can't really fit a bike on. Who's going to buy this? Is it really for utility? Are you going to find rednecks in Oklahoma buying this? Of course not. No way. This is a Kardashian truck. This is the kind of truck you drive in LA, in Robertson Boulevard. So this is not really a competitor to the Ford F-150 or the Ram or anything like that. That's a show-up car. It's annoying as hell. It blocks the vision. It's too big. If you drive behind it, good luck. If you get in an accident with this car, that's another problem. So if you want to be hated, go ahead and buy this car. Everybody's going to hate you, and you're not going to have enough trunk space, by the way. Even a coupe has bigger trunk space than this. But the biggest disappointment here, folks, in the Cybertrash is the pricing that we were promised for the top tier package was about 70 grand. Here's the problem though, and this is from Marquez Brownlee, who's really influential, and if he says this, that's a really bad review for the souffle. He says Tesla Cybertruck is notably the first time that Tesla is straight up not delivering on some of the key specs they promised. They promised a 500 plus mile range and the price at 70 grand. They delivered 340 mile range and the pricing is 100 grand. So this is a flop, folks. This is a major disappointment. This is Elon Musk's fantasy, but it's not a practical car. And it could be the nail in the coffin in this Tesla growth story. It costs a lot, but it's not going to deliver. We have a lot of other problems here, folks. You know, the Model 3 is already saturated in the market right now. And folks who are going to buy the Cybertruck, they want to dump the Model 3, increasing the supply even more, which will crush the margins of Tesla, to buy this thing right here. This is a major problem, folks. You see the negative reaction of the stock, sell the news, and I think there is more to come in this kind of reaction, because when you do the math, when you put it all together, Musk was practical when he produced the Model S, which I think should have been sacked a long time ago, but then the Model 3 was a success. The Model Y was a success. He was practical. But now it becomes his fantasy. I just want to create something that looks cool. Well, there's a price to pay here. And the problem here is we also have the unionization problem for Tesla. After the success of the UAW with GM, Ford, and Stellantis, now the UAW is targeting Toyota, Honda, and Tesla. And Elon Musk now says that there is a high possibility that Tesla could be unionized. He says we deserve it, adding that he made his factory workers millionaires, but conceded that some may still turn against him. Now, he did not make his factory workers millionaires. He gave them shares. The Fed made them millionaires. Why? Because the Fed created this massive bubble that we have in the economy, massive bubble in the stock market, and the stock became perhaps the poster boy of the bubble, one of the most overvalued stocks in history. But that's not going to last. The bubble is going to burst. Stock will go down. And then what incentive do you have for your workers not to unionize? They're going to unionize. And even Musk now admits that it could be a high possibility. That is a major problem for a company that's already suffering from margin contraction. Anyhow, let's do the morning brief here really quickly and then move on. And here it is. Good morning, folks. While managers will try to close the month on a positive note, the PCE index proves that rate cuts fantasy is not in the bag. So we see some important moves in our algorithmic indicators. Dixie passing above 103.463 basis points confirms a bullish reversal in the dollar. We got that. We'll look at the charts in a little bit here, but we got that. So we have a check mark here. Question is, do we have check marks on the others? The US 10-year closing above the open of yesterday's candle at 4.325 basis points confirms a bullish reversal in yields. We'll see if that happened or not. The VIX, so long as the chart keeps yesterday's high at 12.99 as support, the VIX is also showing a bullish reversal. Well, the VIX did not do that yet. And then I gave you a bunch of charts 2 notes ago, some of the value stocks that are really overbought with cheap options. If we have a reversal in the market, those will be good candidates to play a pullback on. Today I gave you some more. We begin with the GDX gold miners. While I entered a position yesterday, I'm eyeing a confirmation today by a pullback to 30.5, which is half of the body of yesterday's candle. Here's the chart that I gave you. Outside of the Bollinger Bands, topping candle, got it. Here's the update though. We dropped down and then we closed positive again. So no confirmation here yet. So if you're going to short the GDX, understand that this is a starter position here. You need to see the dollar confirming the move that we got today, number 1. Number 2, we need to see 30.5 lost to support. Then we have some retracement to do here in gold miners. BUD Bud Light very overbought, and the confirmation of the reversal process is losing 62.40. Here's the chart that I gave you, 62.40. We take that out by the end of the day, we got a reversal signal, we got a retracement trade here. Here's the update. It held the support, went down to 62.40 and held for now. The beauty of BUD is the options are really cheap, even after a big move like this. So if it does pull back along with the market, I know a lot of you want to pick the expensive options, Tesla, Nvidia, etc. But if this one goes 3 to 5%, those options will appreciate by triple digits, so keep an eye on it. If we lose 62.40, you probably want to take a shot on it here. Then we have COIN Coinbase, put in a topping candle yesterday and possibility of a reversal confirmation today. I am targeting a pullback to 120. Here's the chart that I gave you in the morning. You see the reversal pattern and we're eyeing a pullback to 120. Here's what we got. We went to 120, exceeded that, and then we saw buyers showing up by the end of the day, but we did not close positive. So for now, the reversal holds, yet we have no confirmation. But the point being is here, if Bitcoin goes down a bit in a correction, we're going to see Coinbase also retracing some of these gains here. So keep an eye on Coinbase. Then we have NFLX, Netflix, also very overbought, and the confirmation for a reversal is losing 475.20. Here's the chart that I gave you. So we have consolidation, bullish consolidation, but we're really overbought here. So we need to see a loss of this support line. Then we got a confirmation that we have a retracement process here. Here's the update. We lost that line. We closed below 473.97. So we got a confirmation on this one here. So once again, keep an eye on Netflix here. If we see a pullback in the market altogether, and we're due for that, this could be one of the names that we could see profit taking here from. We could go down all the way to 420 here. But one step at a time, folks. Let's move on and cover the market information for you. We begin with the closing of the indices today, and here we go. The diamonds closing positive. Thank you to CRM Salesforce by 520 points, 0.47. Or a gain of 1.47%. The Nasdaq in the red, down by 32.27 points, or a decline of 0.23%. Spider in the green by 17.22 points, or a gain of 0.38%. The Russell 2000 also positive by 0.68 points, or a gain of 0.38%. Sectors mostly positive, led by healthcare, industrials, and financials. So healthcare is defensive in nature. Industrials, it depends on which names. So we have to look at the heat map here. Financials, we have some short covering here going on in financials under the assumption that the Fed rate hikes are done. We have seen the peak in rate hikes. I would caution you though that this was the same assumption back in the GFC, that since the Fed is cutting, the banks will be out of the woods. And we know who led the crisis and the crash. It was the banks. So not my favorite sector here. The laggards, the risk-on, comm services, Google, Meta did not do pretty good today, technology and cyclicals. So it was sort of a defensive theme today, believe it or not. When we look at the breadth, the big caps were down, but value stocks were doing pretty good. So the breadth was actually positive in the NYSE, 61% advancing versus 36% declining. The Nasdaq, 46% advancing versus 50% declining. So we're still within the neutral zone here. And if the market wants to pop one way or the other, this is the time to do so. Of course, looking at the technicals right now, if the market wants to revert back from a mechanical market into a technical market, then the next move will be to the downside. About commodities, what do we see here? Disappointment in crude. We see Brent down down by more than 3%. I believe that WTI was also down, although we're not having an update right here. But we saw RBOB down, heating oil down, although natural gas was the exception here. As far as softs, and we look at lumber, lumber is a really good leading indicator for the market. And if it's been going down, it has been kind of broadcasting that the market will also pull back. It did predict the bottom in late October, and then the market followed. So lumber is a really good leading indicator here. It continues to go down. We saw a pullback in OJ futures worth about 2.5%. Sugar down about 3.25%. Massive move here in sugar futures. But it's also a big move, bigger than sugar here in coffee futures, up a little over 7.5%. So you see the stock of Starbucks going down along with that. As far as metals, muted across the board. As far as grains, we see a little bit of movement here, a little bit of buying in wheat. It's quiet buying for now. Maybe we're seeing a bottoming process here, but we need to see a little more. And then we have a confirmation that, okay, wheat is about to go higher here in a sustainable way, of course, but one step at a time. Moving on to the options market, aka the big casino, what do we see here? The volume, believe it or not, since Thanksgiving been really muted here. We see some action in certain names, but nothing significant here. We see Tesla, Nvidia, Tesla for the Cybertruck event, Nvidia. I believe that we're seeing a lot of selling today, so a lot of folks are buying calls, betting that Nvidia is going to rebound. Good luck with that, but the volume otherwise is really low. Yet when we look at the ratios, folks, they're still buying calls aggressively. And we're about to get the sentiment reading. I believe it's going to be out today, if not tomorrow. And I believe that we're going to see about 50% of the participants see that the stock market is going higher in the next 6 months, if not even more than 50%, which will be an outlier reading and probably a good leading indicator that the opposite will happen. And we know that because look at the calls here, 60s, high 60s in certain cases versus puts. So we see somewhat of a euphoric mode here, even though the participation is low. Let's go to the unusual activities, see what happened today. And we have BMBL Bumble. We've been seeing a lot of puts being bought here, a lot of unusual puts, betting that the name will go down big. What's going on here with Bumble? If we look at the chart, so if you recall, we had a trade on it maybe about 2 days ago. Somebody was buying puts. I think they scored big here in this pullback in Bumble. We see sort of an expanding range here. Some would call it a megaphone pattern. We got to the highs. Are we about to go down to the lows at around the 13 mark? Is there trouble with the company? It's not on solid fundamentals anyways. So here we have somebody who bought the 12 puts for the expiration date, January 12. Expectations, Bumble will go down and lose more than 13.5% of its value by then. Paid about 25 cents a piece, dinner. This trade, all in all, spending about $500,000. And then we have the ticker MRK for Merck. This is quite unusual because it's an old school name. They don't trade options on it a lot, but somebody's betting for a big drop here. It could be due to an acquisition piece of news that Merck is buying a smaller company. And usually when this happens, the stock of the bigger company goes down, the stock of the company being acquired, the smaller companies, explode higher. The question is, which company is Merck buying? You have to look around here and speculate. If you have insider information, let us know. But since it's a put option trade, it could be the other way too. It could be that Merck perhaps has some disappointing news, that a drug failure, trial goes wrong, FDA approval doesn't get through. Anyhow, the trader bought the 95 puts for the expiration date, February 16th. The expectations, Merck will lose more